Hey guys, welcome to the August edition of the Road to Retirement series. This is a new series I started last month where I essentially walk you through my entire investment portfolio. That includes my pensions, my ISAs, my GIA for myself and my spouse. And the intent of this series is to essentially take you guys along the journey that I'm going down of discovery and learnings of how can I retire early. How much money do I need for retirement? How far away am I? What's the best places to put my money for a better retirement? So that's a journey I'm going down myself, and it's a journey I want to bring you guys along with too. As I did in my last video, I will walk through the updated numbers, but I think it's worth asking ourselves a few fundamental questions about retirement. And some of these fundamental questions in my mind are, number one, why do I want to retire? Number two, how long do I have till that retirement age? And number three, how much income do I think I need per year as long as I live? And if I'm being totally honest with myself, I don't think I've got final answers to all those questions, but that's okay. I think the key thing is we start to think about this early on as possible, and opinions and values change as you get older, and you can adapt your strategy and thinking accordingly. So what's my answer to some of these questions? Well, why do I want to retire? Well, most people think the obvious answer is so you don't have to work anymore. But for me, it's the freedom to decide when and how I want to work. I'm currently in a fairly well-paying job where I actually sort of enjoy my day-to-day work. It's not too stressful, and I'm happy with the challenges that I get to face on a daily basis and overcoming those challenges. That position may change in 15, 20 years' time, but actually I don't enjoy it anymore, or I want to take a couple of years out. So unless I'm in a financial position where I'm able to take 2 years off and fund that couple of years, I won't be able to do so. So for me, it's the freedom to decide how and when I want to work. The second question is, at what age do I want to retire? For me, this one's a bit more difficult. So I'm currently in my early 30s, and my current thinking is I want to retire at age 50. Right, and I know it's an arbitrary number, but I think that's a good age where I've worked for a good amount of time, and I want to take time off to do other things that I enjoy, whether that's traveling or taking up other hobbies. But I think that's a good baseline position to work from for myself, and that may differ for all of you guys. But obviously that may change as time goes along. The third question is, how much income do I think I need per year in retirement? And this question I also needed to do a bit of research because initially I just had no idea. A website that really helped with this is the Retirement Living Standards. So this is a free resource you can look up on the internet. And it basically gives you an idea of what level of living standards you can expect based on the level of income that you'll have per year. And there are three categories of living standards. There's minimum for a single individual, that's 14,400, and a couple 22,400. Moderate for a single individual, that's 31,300, and a couple 43,100. And last, you got comfortable for a single individual, that's 43,100, and for a couple £59,000. And if you want a bit more of a breakdown, the website does give you a bit of a more detailed breakdown of what you could expect. So for example, if you look at food, for the minimum category, that's £95 a week on groceries, £50 a month per couple on food out of the home, and £30 a month on takeaways per couple. Comparing that to the comfortable category, which is £130 a week on food, £80 a week per couple out of food of the home, £30 a week per couple on takeaways, and £100 a month to take others out for a monthly meal. And another category that's close to my heart is holiday and leisure. For minimum, that's just a week-long UK-only holiday. A moderate is a 3-star fortnight holiday, all-inclusive Mediterranean, and a long weekend break in the UK. And for comfortable, a fortnight 4-star holiday in the Mediterranean with spending money, and a 3 long weekend breaks in the UK. And what everybody wants in retirement is obviously going to be different, but looking at these categories, I'd definitely be in the high range, that comfortable or a comfortable plus. So comfortable is £59,000 a year for a couple. So ideally, I think I should be aiming for 80 to 90,000 pounds a year. So at least I can go on a couple holidays a year abroad, and I can go out to some nice restaurants more often than listed in the comfortable category. And this is probably a good time to talk about the 4% rule. So the 4% rule is the amount of money you can take out per year of your total investment sum for 30 years without running out of money. So in this example for August, my total balance is 345,675. 4% of that is 13,827. So this is what I could take out per year for the next 30 years in retirement without running out of money. And that's just based on some assumptions on previous market performance. This is just a guideline. This is not a firm figure. We don't know how the market's going to perform. So really it should be used as a baseline. And when you get closer to retirement, maybe that's a good time to work with a financial advisor to work out a bit more of an accurate position of what you could potentially take out every year and finding tax efficient ways of doing that. If you wanted to be a bit more conservative, you could use a potential 3% rule, in which case that will give me 10,370. Or if you're a bit more optimistic, you could use a 5% rule, which is 17,283. And there's probably a lot of variables there. The 4% rule was based on a 30-year retirement period. Obviously, if I'm retiring at 50, I may live 40 or 50 years, so in which case I might lean towards the 3% rule. Also, that 4% rule was based on a portfolio of 50% stocks and 50% bonds, and at the minute I'm 100% stocks, so that could also influence how much I could target per year in retirement. So looping this conversation back to what size pot would I need to have an income of £80,000 per year? It's just a bit of math, so it will be £80,000 times 25, and that's the 4% rule. So I'd need a pot size of £2 million. If I wanted to be a bit more conservative, I could do £80,000 times 33, and that links more to the 3% rule, and that's 2.64 million. So based on my current portfolio size, I'm still a ways off from that. Now's probably a good time to start looking at the numbers. So I'll walk through the numbers as of 29th of August, but bear in mind this is any gains plus any contributions I've put in the last month. Starting off with the pension, the value of that combined between me and my spouse is 148,771, and that's a 3% gain from last month. So I have made a couple of changes to the pensions. So for myself, I'm a higher rate taxpayer, and previously I put in 6% via my salary sacrifice pension scheme through work. I've increased that now to 8%. The reason I did that is because I'm trying to utilize the tax efficiencies of that pension wrapper. So I get 40% tax relief on anything I put into the pension because that money's taken out before income tax. So I've increased that now to 8%. The other change is we've now created a SIP for my spouse where we put in £400 a month. She's a basic rate taxpayer, so she gets 20% tax relief rather than 40%, but it's still better than nothing. So going forward, we should see this pension really compound as we're even contributing even more than I have in the previous months. Next up, we have the free trade ISA. So the value of this sits at £112,725, and that's a gain of 7% of the previous month. And the main reason for that is Palantir stock is performing really well. I will have an update on my free trade ISA very soon, so keep an eye out for that video. The free trade GIA sits at £17,794. The value of that is 8% less than it was last month. And the reason for that is some of the stocks in that portfolio have been hit, the main ones being Starbucks and Intel. Next up, we had the Vanguard GIA, which sits at £16,090, and that's 3% less than it was last month. Someone made a very good comment in my last video around, should you sell your GIA and put that money in a pension? And it's kind of triggered me to kind of do a bit more research on this. The GIA is a taxable account, so it's subject to capital gains tax, it's subject to dividend tax, etc. So would it be a tax efficient approach to sell some of the GIA stocks and put it into the pension where I could get pension relief? So that's something I'm thinking about, and maybe I'll touch on that in the next month's update. Work shares sit at £17,701. That's 12% up from the previous month. Crypto, basically minimal changes. The value of that now sits at £9,891. The Trading 212 ISA is a newly created ISA we've created for my spouse. The value of that is 1,441. It is up a comical 329%, but that's due to the contributions rather than the gains in the stocks in that portfolio, which is just the order index fund. Lastly, it's another ISA that my spouse owns, and that's with Vanguard. So that sits at 21,262, and it's up 3% from the previous month. So that puts the total for August at 345,675, and that's a 4% gain from the previous month. Based on that total and what we talked about about the percentage rule, 3, 4, 5%, if I decided to retire today or tomorrow, this is potentially what I could take out every single year for the next 30 years. So for the 3% rule, I would be able to take out 10,370. If I worked on the 4% rule, that's 13,827. If I work from the 5% rule, that's 17,283, which is still obviously a way away from the £80,000 per year that I'd like to take out. So that's going to conclude the August update. Do bear in mind I'm still very new to investing, even though I've been adding to my pension since I started working. So everything I say is not financial advice. It's just me sharing my thoughts, my opinions on my current situation. Please let me know in the comment section below if there's anything you'd like me to cover in the next month's update.